Shareholder protection is about buying shares back. Key person protection is all about making sure the business can continue to survive after the loss of a key person. It might be, managing director's got lots and lots of contacts in the industry that just can't be replicated, or it could be a financial director and they would need immediately to go out and hire someone else or outsource it to their accountant or whatever. The third is, still part of the continuity planning is debt protection. So a lot of our clients have taken out commercial mortgages, or they've got invoice factoring or some other financial arrangement that if the worst were to happen, they would need to make sure that that was paid back, because the business might not be profitable enough to maintain those payments. And they might have also signed a personal guarantee on it, which they're usually not happy about signing, but usually want the debts. If they're concerned about personal guarantees, you can insure part of it. And then pivoting more to the people within the business and their needs as opposed to the business's needs directly, you've got individual cover and you've got group cover for the life, critical illness, income protection, and private medical. So we do schemes on the group side from 2 people up. It's not that common to have a really small group scheme, but if you've got a business where there's only a few of them at the moment, but they've got very aggressive growth plans, it might be appropriate to do so, because instead of having to write another plan every single time someone joins, you just add them to the group, and it's very cost effective, especially at scale. And then on the tax saving side, which is still part of the employee benefit, so to speak, there's 2 that are incredibly beneficial. The first is relevant life. So a relevant life plan acts a bit like an ISA. It's just a tax wrapper for a life insurance policy that a limited company will own and pay for. It's an allowable expense. You save on corporation tax. It never gets to the point of paying income tax or NI, and the proceeds pay into trust for whoever you want the money to be left to. So if you've got a limited company and you've got a requirement for term life insurance, it is usually, I can't think of any reasons why it wouldn't be, it's usually the best way of setting it up, especially when you consider that you can convert that into a personal plan down the line. So if you sell the business or you leave it for some other reason, you can just convert it into a personal plan, which is then priced as of when you took it out, not